In these uncertain economic times, it's easy to be worried about protecting your wealth, your hard-earned savings, and your family's financial future. Plunging interest rates, the devaluating dollar, and political unrest constantly threaten what you have worked hard to earn and all that you own. That's why now it's more important than ever to protect your assets and have the money you need to make your dreams come true. Welcome to the Global Wealth Fortress Report with successful global entrepreneur and wealth preservation expert Joel Nagel. Joel's helped thousands of people just like you protect what you have so that you can make even more and make your every dream come true. So, sit back and enjoy Joel Nagel's offshore expert advice on how you can live the good life at a great price, where the sun never sets on your financial fortress.
Hello, and welcome to Joel Nagel's Global Wealth Fortress Report. The good news is that Joel, America's #1 asset protection attorney, just got back from a major conference in Belize, over 100 people, where I'm sure he got a lot of questions about how to protect your assets in these tough times. And we're going to ask him what he told them. Joel, welcome.
Hey, Carter, good to be with you. I'm actually still in Belize. I'm flying home tomorrow, but it was a lot of people here, and it was nonstop action, and there was a lot of panic, honestly. From all sides of the political spectrum. I would say one of the most interesting conversations I had was with a very, very successful attorney who herself is a self-described liberal. She came up through the ranks working with Ralph Nader, very, 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 very left-leaning, progressive. She's just as upset as any of the colleagues and friends on the right side of the political aisle. She's worried, she's scared, she's worried about asset protection. She's worried about, getting a second residence or passport so that she can travel, not be, locked out of, free movement and things like that. So, normally in the past, one side of the aisle was happy and one side of the aisle was unhappy. And now it seems like the way it's working now, it seems like nobody's happy. Everybody is, gasoline prices through the roof and inflation. We know a lot of the statistics are just complete fabrications in terms of, unemployment, inflation, those types of numbers. They're just not real. And the quality of life for people is eroding. And, that's hard for people. Again, it doesn't matter if you're Republican, Democrat, Libertarian, anarchist, it doesn't matter. You're feeling it and seeing it. And that's, for business, it's good. But for, when you sit down and talk to people and you realize how stressed and how much anxiety and fear they really have. I've been at this 32 years. I've never, ever seen it like this, ever.
Never. The Constitution, or I guess it's the Declaration, talks about guaranteeing us a pursuit of happiness. There ain't no pursuit of happiness right now. You nailed it, Joel. The prices are out of sight. I saw the manufacturing as a percent of GNP. The experts predicted it would be 16% year over year. It was 2%, Joel. So what does that tell you about the future? And
even that 2%, you wonder how real it is. I saw that the administration's trying to say that, the U.S. economy outperformed China's, for the first time in a number of years this quarter. But, it's like everybody all around the world is hurting. So, to say that, you're doing poorly and I'm doing only marginally better than you doing poorly, that's not the, measuring stick of success. So that's where we are right now. And, it's people are also stressed out because, at the moment, everything's going down, right? Everything seems to be correlating with everything and everything's going down. So, one of the exceptions at the moment is cash. The US dollar is artificially going up because of war and, people in other parts of the world who see their currency as even worse. including
Yeah.
the Europeans, honestly. I mean, we've seen the euro dollar exchange rate go from about 125. It bottomed out at about 103, 104, and now it's 105, 106. But the dollar is at almost an all-time high. And so to me, what that means is it's a good time, if you are sitting on dollars, to diversify out of them. This is when you should be looking at alternative currencies like the Swiss franc, like the euro, some of the Scandinavian currencies, maybe some of the Middle Eastern currencies, and even if you could buy the Russian ruble, I would say that as well, because I think that'll eventually come back. Again, that touches on a political sore spot for a lot of people. So probably steer clear of the ruble, but the renminbi, the Chinese currency, I mean, all these currencies are artificially undervalued, meaning the US dollar is artificially overvalued. So particularly if tomorrow you're going to get up and go to work and make more dollars, then why not, from an asset protection standpoint, convert some of what you have into these other currencies? And that's really the number one message that we were talking with our clients, in addition to the traditional things like metals, gold and silver, platinum, palladium, real estate. It's here in Belize. A lot of people were talking about real estate while I was here, and other, and then the cryptos. I mean, there's a lot of tumultuousness in the crypto market right now as well. The coin Luna collapsed the other day, and maybe there's some financial shenanigans going on. We don't
Right.
really know.
Right.
And that's pulling down the cryptos. But I think they're also oversold. So if you're sitting on dollars, it's maybe a good time to look at some of the big, powerful cryptos like Bitcoin, like Ethereum, the major ones. I'm not suggesting any of the tertiary or very, very highly speculative coins.
Well, Joe, you mentioned, and I agree with you 100%. I mean, the cryptos are down around a little over 20 right now, but I think they'll seek back the level, back that they were at around 40 or so. But the ruble, whether people like what Russia did or not, the fact of the matter is the ruble's stronger now than it was before the sanctions were imposed. That's just the fact of the matter. And I think you have to take a look there and say, Russia's either going to win or lose in Ukraine, but whether it wins or loses, Russia is still going to be there, and it's still going to be a major provider of oil and gas and rare metals. So
yeah, I mean, Gazprom's another example. It was trading in the 40s not long ago. It worked its way down to 10, and then it fell from 10 to 1, and then it was delisted. So, and it's not legal right now to buy or sell Gazprom. But the fact of the matter is the price to earnings had before it was delisted fell to below 1, which is just unheard of. Most stocks are trading, like oil and gas companies, they trade in a 12, 15, as high as 20 to 1 range. So that means if you buy the stock today, it's going to take you 20 years of earnings to get your money back. And Gazprom fell to less than 1. So that means you would basically be paying for the price of the stock what the dividend was going to be. Of course, right. Now they suspended their dividend, but I think that it's pretty clear that whenever this conflict ends, whether it's in a couple of weeks, months, or years, they're sitting on the largest reserves of natural gas in the world. If you look at it purely from an economic play, in fact, if they stop supplying the West for the time being, that just means they have more oil and gas in the ground. And, they've required more and more countries now to pay for oil and gas in rubles rather than dollars. And that's what's caused the ruble to actually go up. It originally was trading around 75. I think it fell to over 150. Now it's back to about 60. So, from its low, it's up, 300%. And it's higher than it was when the war started. So, Putin understands how that works. A lot of people say that he's basically showing the rest of the world how to, topple the dollar as the world reserve currency. And that's by saying, for certain things that everybody needs, that you're not going to accept dollars anymore. And, like you said, the dollar's a little bit overvalued right now in historic terms. But if it loses its world reserve currency status, you could expect the dollar to fall along the same lines. When the British pound stopped being the reserve currency for the world, it fell in a very short period of time by over 40%. And we could find the same thing happening, maybe not during the war, but it could happen during the peace, right?
Yeah.
Once everybody's happy and everything is, you put Humpty Dumpty back together, and then people say, well, I don't really need dollars, do I? It's just like when COVID came, people said, I don't really need to go to work I don't really need to go to the office to get my work done. Now people are saying, hey, I can do global transactions around the world. I don't need the dollar. So when more and more people realize that, I think you are going to see the value of the dollar slip, and maybe quite quickly after the hostilities end. I do think it's the hostilities that are propping up the dollar right now.
So the folks down there and in Belize at this major conference, I mean, these were all stakeholders, shareholders, and ECI, so very, very savvy, sharp people. Did they get that message? Did they seem to understand what you're saying? That folks, you got to look at the future of the dollar and realize, as you said, diversify out.
Well, I think that's one of the reasons that, like, real estate all over the world, but particularly in North America and also here in Central America, it's really going up pretty rapidly right now. And I think it's because, people would rather have real estate than the corresponding amount of dollars, right? Because if you fast forward 3 years, 5 years, 10 years, if a piece of real estate's worth $200,000 today, in 10 years, that real estate will be worth more and the 200,000 will be worth less. So which do you want to have? I'd say the same thing about, the cryptos. Again, I'm not an investment advisor. I'm not telling you that, Bitcoin's going to go up, down, or sideways tomorrow. But, Bitcoin is finite. The dollar is infinite. So whenever you're using an infinite asset like a dollar to buy a finite asset, real estate, gold, Bitcoin, then over time, it will always take more and more of those infinite assets to buy the same unit of finite assets. And, there's a concept called Gresham's law that says, that's sort of behind the scenes, what influences people and their buying habits. And, Gresham's law says that people will always use what they believe to be the less valuable currency. So for a minute, think of everything as a currency, right? Your shirt's a currency, your bowling ball is a currency, your car is a currency, gold's a currency, the crypto's a currency. You've got all these things that are currencies, and we're exchanging them one for the other. So the question becomes, which currency are you willing to give up first? And right now, that the currency people are willing to give up first is the dollar. It's not Bitcoin, it's not gold, it's not real estate. And when we come out of war in Ukraine and Russia, and the world stops sort of artificially flocking to the dollar, I think that will only speed up more. People won't need dollars to buy oil. They're not going to be, fleeing to the dollar as a safe haven, once the war ends. And I think you're going to see that what they really are going to do is spend their dollars. If you're Japan, if you're China, and you're sitting on huge hordes of US dollars, US treasuries, what are you going to do with them? You're going to spend them. You're going to get rid of them for anything. You'll buy metals, you'll buy real estate, you'll buy whatever, because that currency in your mind is deemed over time as being more valuable. If I buy a 30-year treasury bond today at 2.5%, who in their right mind thinks that 30 years from now that 2.5% is even going to keep me on pace with inflation? I'm guaranteed to lose at least half or 2/3 of my money if I put my long-term investments in treasuries. So you're going to spend that treasury, you're going to get rid of it, you're going to get something you perceive as being more valuable. And at a real estate conference, like a meeting like what ECI had, the common denominator of the people in the room is that they do highly value real estate.
Yes.
And this part of the world, by comparison to US and Canada, it's still very, very underpriced. I'm staying in a beautiful condo right now that, probably if it sold, it would sell for $250,000, $300,000. A beautiful location on the ocean, swimming pool, the whole deal. If I was in the same, whatever it is, 1,200 square foot condo in Miami, it would be 10 times that. It's going to be, 2.5, 3 million. So it's more affordable for people to buy. When they come and spend time here, it's more affordable because the cost of living is lower. And the upside, is much better than, what's the greater likelihood that my $250,000 condo in Belize is going to double in value, or my $2.5 million condo in Miami is going to double, right? For the Miami condo to double, it's got to go up $2.5 million. My condo here, it only has to go up 250,000 to get the same return on investment. So I think that's what's causing more and more people. But we saw so many people, for the last couple of years because of COVID, people weren't really coming. Shareholder meetings were all being done virtually, and we were just we were overwhelmed with the number of people who showed up. And then they all wanted to talk about this stuff. I mean, I had 50 sidebar conversations exactly like this.
Yeah, and I'm thinking the other day I was watching Grant Cardone. I'm a big fan of Cardone. And he was saying that if you took $1,000 bill, this goes right to what you're saying about the dollar becoming worth less and less while land is going up. He said, if you took $1,000 bill in 1970, put it in your desk drawer, he had his desk there, closed it. You took it out today, it would be, what it would buy would be worth $120. Well, that's horrifying. By the same token, a piece of land you bought back in 1970 for $1,000 could be worth $100,000 today. Mm-hmm. And ECI, I think you have residential resorts or either in place or being built in 6 different countries there. And in my opinion, if I want to protect my assets, that's where my money's going. What do you think?
Absolutely. If again, real estate's a good measuring stick because it's finite. Gold, I think, as well. If you talk about before Nixon took us off the gold standard, that same $1,000 in your example would be, roughly 33 ounces of gold. 33 ounces of gold today would be, that would be $66,000. Wow. So, and I remember a few weeks ago we were talking about the inverse, which is, somebody was selling gasoline and they had the sign that said, it's 20 cents a gallon if paid in pre-1964 dimes, quarters, and half dollars and dollars. And so when you think about that, okay, so because an ounce of silver now is worth let's say $20, just to round it off. So a quarter of an ounce would have been $5. And gasoline, if you compare it that way, gasoline, even though we look at it as being very, very expensive, the reality is it's cheaper than it was in 1964. Because in 1964 you were using these silver coins to pay for your fuel. Right. And so if you were paying in at that time, I don't know exactly what the price of gasoline was in 1964, but I'll bet it was more than 20 cents. It was 30, 40, 50 cents, somewhere in that range. So in silver terms, oil's cheaper. In dollar terms, oil and gas is much more expensive. So you can see how it influences people's behavior, how they spend, where they buy, how they invest. And again, I can't say it enough. A lot of times people say, but Joel, you said, crypto is going to be good and silver was going to be good and gold was going to be good. And, here we are a month later and it's down 5%. That's because, supply and demand moves these things around all the time. And so you can't, as an asset protection lawyer, I'm not trying to predict what it's going to be, next week or next month. But if you're thinking about your kids, your grandkids, your retirement, things that are years and decades in the future, then you want to think about things that are going to protect that wealth. And no matter what things you like, just remember, things that are finite are always going to be worth more than things that are infinite. And The dollar right now is infinite because the U.S.
Excellent.
Fed and the Treasury, they can go print $1 trillion tomorrow, the next day, as many days as they want. But any of the assets that we're talking about, you simply can't do that. So over time, they're always going to be inherently more valuable.
And Joel, I do happen to know what gas was selling for in 1964 because
Tell
I
us.
was a big fan of Andy Griffith's show.
Okay.
And Gomer Pyle used to say, gasoline's 25 cents a ding. 25 air's free. Gasoline's 25 cents a ding. So it dinged at every gallon. So there we go.
Well, there you go. I mean, that means in 1964, gas was 25 cents a gallon. And in silver terms, the gas station today, what is that, 58 years later, is willing to sell it to you for less in silver. Instead of 25 cents, they're going to sell it to you for 20 cents. So that means in silver terms, gasoline's gotten 25% cheaper. But in dollar terms, it's what, 20 times more expensive or more.
Oh, yeah.
So
horrible. Well, so your advice to the folks down there: diversify, get out of the dollar, get into land. Good summation.
And all those things. I mean, land is an easy one because it gives you not only the upside from an investment, just like Bitcoin and gold and those things, but it also provides at the same time for an alternate lifestyle, a plan B, where you can go, you can spend time. You can't live in your gold. You can't live in a pile of Bitcoin, but you buy a nice condo in Belize, and yes, you can get a twofer. You can go live there, and it's going to increase in value all at the same time.
And to find that land, I just happen to have this right here. You are a partner in ECI, and folks, right there, all 6 of those developments I just talked about. Check it out. And for more in-depth advice, go right there. Nagel Law. All right.
Thank you, Carter.
It's fantastic. Joel, thank you very, very much. This has been great. Very informative, very helpful as usual. And enjoy Belize. And where will you be next week when we talk?
Next week, I am going to be in my office in Pittsburgh. I'm looking forward to it. I actually travel home tomorrow. I have 2 graduations over the weekend, Memorial Day weekend. But by late Monday, I'll be back in my home, which I haven't spent much time in recently, just because of all the activity everywhere. Tuesday, I'll be in my office. So I look forward to talking to you from there.
That's great. Thank you. Thank you
Great.
for joining us. All right, folks.
Thank you.
There you go. Straight from the Assets Oracle. Where to put your money, how to diversify, protect it. As I tell you every week, let's do this thing.